What's up, guys? It's Pac. Welcome with another market review of May 8th, 2024. Again, guys, we're doing these market reviews every single day the month of May, so go ahead and hit that like and subscribe button. Let's get right into it. So, here we are at market open on Wednesday, May 8th. We have it pulled back a minute right before. We can see that the 1 minute structure has been bearish, right? Because we are clearly in a downtrend. There. There's no structure in between here, so we know all of this is non-structure. This gray box below is a 12-minute, completely unmitigated 12-minute zone. So it hadn't been used yet. And then we bounced here and we just put in a valid, pretty strong valid low with the V move here. Expecting price to at least start to retrace back up possibly into this area, or either this or it decides to put in a valid high, or I mean protected high here, breaks, and then see if we can get a push. What I was telling everybody that I trade with was I was talking about in the manner of, hey, this is a completely unmitigated zone on a higher time frame. Most likely you're going to get a push to the upside. Most likely you're going to get a push to the upside. This gray box in the upside is our last 12-minute zone as well, and it's completely unmitigated. So when this occurs, all we need to happen when you have that big drop down, remember we talked about this in one of the previous market reviews, when you have a big drop down, all you need is price to flip over an internal structure here, and then you can just track internal structure until it gets back to the previous zone because we're just in a larger range, right? So right on open, you can see we push right up, we break out of the initial range high, which would have been this. So we hold that. So we're expecting a trade back in. We're expecting a trade back into this little range, this little tight range that formed on open. Now, you can see that there is a valid low here. Yes, it's not going to be a protected low or anything like that, but there is another valid low that occurs right here on open. And so you can expect, since we have our protected high so far up here and we're inside a higher time frame bullish zone, that we should start pushing on open if we get a tap back into that. And right there, you get a tap right back in. It might have missed it by a tick. Let's see. The high of that candle is 92.50, and the low of that candle is 92.50. So it hits it exactly to the tick there. Oh, taps it even better there, and starts putting in new highs. Remember what we said before we started doing this, is that all this is non-structure. So you would, if you were looking for longs right on open, where would the best target be? The best target is going to be taking out non-structure, right? Taking out something up here. That's going to be a really, really nice target for you if you're looking for longs. I wouldn't be looking for shorts in this situation is because we're in a higher time frame unmitigated area. Yes, we're bearish on the higher time frame. We can clearly see we're bearish on the higher time frame, but we're in an unmitigated area and it's showing us on the lower time or on the higher time frame and lower time frame that we want to push higher. On the 12-minute, when it breaks this dotted line here and closes, you get I believe you get a 12-minute valid low, which tells us that price wants to start to retrace. It tells us price wants to start to retrace there. So as we continue here, remember we can just follow internal structure because that's just this, this bad boy. So we can just start following the internal structure. I'm going to change the color to, I don't know, green sounds good. So if we have a high there and a low there and a high, nope, nothing there yet. Internally, of course, internally. Let's wait till a valid high occurs. And remember that we would still be looking for bullish moves until a valid high occurs. We'd still be looking for bullish moves until a valid high occurs. That closes right on the wick, so we would not consider that a valid high. Still no close. And I'll just go forward to when we do get a valid high. And you can see here on open, we're still just pushing. We're not getting any indication that we should go short. So if I am bearish, even if I'm bearish out of this zone, I'm like, okay, cool, completely unmitigated 1 minute zone right here. you don't want to just take this blindly. You want to wait till the 1 minute shows you something. Whatever time frame you're trading from, you always want to wait for that time frame to show you what it wants to do. It wants to show its hand, right? Still hasn't closed a valid high. Okay, nope, still doesn't close one there. And it never closes a valid high inside this zone and just pushes right through. So even these wicks, they're not good enough. One thing I want to point out is since we have this completely unmitigated zone just above on the 12 minute, which I'm changing to blue here, with this unmitigated 1 minute zone, you would expect it to get ran. Why? Because there's an unmitigated higher time frame zone above. So it's not just going to stick to the 1 minute. It might give you a reaction. It gives you that 1-to-1. So if you're a 1-to-1 trader, awesome, sweet. But you would expect it to drive up into this and then try to do something here. Now, as we continue with price, still no valid high. We get a close over this one, meaning what? Meaning that we have shifted structure. We have shifted structure to bullish on this time frame. We're now completely bullish on this time frame. So now, even going into this 12-minute zone, I'm not just going to expect shorts to come out. I'm not just going to expect shorts to come out. Why would I expect longs at this zone that was completely unmitigated 12-minute and not shorts at this one? Well, the higher time frame, the 144, I believe that was still bullish. Let's see. Let me see. Yeah, 144 is still definitely bullish. So our higher time frame is still definitely bullish. Again, we just follow 1 minute structure. So if you didn't get involved here, that's okay. At this point now, here being 10 o'clock, sweet, I'm definitely bullish. I'm good to go if everything lines up for me. So I can just look for bullish trades until when? Till a valid high occurs. Till a valid high occurs. And has a valid high occurred yet? No, not yet. It didn't close underneath this wick. So I wouldn't even be looking for the short side of the market yet. I'd just be looking on the long side of the market. Until when? Until a valid high occurs. Still haven't got one. You finally get one there. You finally get a valid high here. Now, with this valid high, we have to ask ourselves, where is our previous zone, right? Where's our previous 1 minute zone? And our previous 1 minute zone happens to be here. It happens to be here. So if that's the case, where is our technical SNDR? Well, it's probably somewhere in this area. It's probably somewhere in this area. And remember, the easiest way to find out is just use the 70-30. Okay, it might be a little bit lower. This is the only swing that really catches my eye. We're tapping right on top of it. Immediately put it in a valid low. Remember, if you put in a valid low immediately after putting in a valid high, you're not shorting this, or you're getting out of a trade if you're in a short because you're going to expect price to run higher. It taps into the SNDR, and I still believe price is going to run higher here because of that little nuance. Because of that nuance. There's a valid low. This is definitely confirming that it wants to go higher. Why? We swept all this stuff up. We hit 50% of the SNDR. It's definitely going higher. Awesome. So now that we've used this portion of the zone, us being around 30 and 70, are we expecting price to use the 50? Possibly, because we didn't actually tap the 30 here. Possibly because we didn't actually tap the 30 here. But again, you wouldn't even look for shorts in this zone. Why? Because price is bullish, right? Price is bullish. That's why another reason that shorts aren't a super great idea here as well. Why? Because price had already flipped bullish. Price had already flipped bullish. Make sure I circle my stuff for you guys. Flip back up. So a valid high just tells us that we're going to put in a retracement. No valid high until right there. There's a valid high right there. So we're just going to retrace. And then we should expect what? Higher prices, right? Once we get that valid low occurs, right there, you should expect higher prices. And that just gives us what? A new swing. Right there. A new swing right there. So we're just following the 1 minute structure. It's simple as that. We just have to know when we can convert to internal structure or you continue using the external stuff. As price continues higher here, there's no reason to short. There's absolutely no reason to short in this market. So it doesn't matter if you got like shorted in here. Once it breaks this, yeah, you could take this for a quick scalp, but again, counter trend trading is a lot more difficult. So why don't you just wait till those things occur, put in that valid low that shows us more direction to the upside, and then just continue trading that direction. If you just stay on the side of trend, life becomes a lot easier. If you just stay on the side of trend, life becomes a lot easier. Okay, there's a valid high. Now we have to ask ourselves, where are we at? Where are we at? So if this was a zone up here, and you can see we broke out of it, right? Broke out of that zone. I'm talking about this one right here. Broke out of the zone, used the 30, put in a new low, and now we're trading back up towards the 70. Do you think that that's possibly an area where you can get some shorts? Possibly. Now, if you're like, okay, Pac, you just said it's counter trend. I shouldn't be looking for counter trend. Great. So should I be looking for longs now? Or should this be an area where I should say, okay, I need to see what happens? If I'm not comfortable counter trending, this is an area where you should say, I should see what happens. Remember, you have your new zone here. We'll put this in gray. We have a high here. You have a valid low there. And again, why is this a trade that you do not want to take? First off, it's not inside of our zone, so no zone, no trade. Second off, we're in a higher time frame area where we would expect shorts to start coming from. We would expect shorts to start coming from. Not saying you should take shorts, but you should expect shorts. So you definitely shouldn't take longs if you're expecting shorts. And there's a flip, bearish right there. So at this point, even if you were like, man, I missed all this stuff. Okay, cool. Now this is confirming. This was your indication because we're in the area. This is your confirmation. Now, yes, there are traders like myself that can get involved in all of this on the downside, but you have to respect what you know and what you've studied and what you've back tested and what data you've collected to be able to know that this stuff is going to occur. Because if you don't know that that stuff's going to occur, then you're just going to end up being on the wrong side of the market when you finally feel comfortable. So just make sure that you continue your studying, continue your data testing, continue your back testing, forward testing, price discovery, all that jazz. But just know if we just stay on one side of the market till that 1 minute shifts, life gets a lot easier. Life gets a lot easier. So what are we looking for? We're looking for shorts. So what needs to occur first? A valid low. Okay, awesome. A valid low occurs. So then after a valid low occurs, what needs to happen? A valid high, right? So once the valid high occurs, what can we look for? We can look for shorts. Has a valid high occurred yet? No. No valid high. Valid high occurred right there. And guess what happened? The moment it closed it, it tapped right back in, gave you some shorts. It gave you some shorts. We'd expect it to take the low. Boom. Continuation of structure. Awesome. There's a high there, continuation. So now what do we need again? We need a valid what? We need a valid low to occur, and then a valid high, and then you can look for shorts again. Okay, there's your, is that a valid low? Yes, a valid low has occurred there. So once what? A valid high occurs, you can start looking for shorts. Awesome, there's a valid low right there, or valid high right there, sorry, excuse me. So if I was taking this trade, if we remember back to video 9, where does my stop go? Does it go here? No, it starts up here, right? At our protected area. It starts at our protected area, and then you can move it down. So if this is a trade you take, let's just play it out for example's sake. Let's say this is a trade that I take, and I'm going 1-to-1, which is about the low. see what happens. You enter a state of range, and boom, there you go. Congrats, you won a trade. Yeah, maybe you got stopped out. Maybe you're like, okay, cool, sweet. I put in that high, this low, that high. Maybe I should move it here, and you get stopped out for 6 points. That's okay. Again, it's all a game of probabilities. But if you go for the one-to-ones, like I keep talking about, you are extremely safe. And then if you also pick proper targets, you're extremely safe as well. So don't be greedy. Pick proper targets. Pick one-to-ones. You don't need these crazy RR trades to be successful. So what do we have? What do we have now? We have structure here, right? We have a low there. We have high, that one closed. We have a high here, and then we have another closure. So now we have what? A new zone right there. A new zone right there. So again, what do we need to occur? We need price to put in a valid low, and then put in what? A valid high. Then we can look for shorts. So a valid low right now is when it closes over this candle. We'll change it to like purple or something, or black. That's fine. So you get a closure. Once you get a closure underneath the highest bullish candle, congrats there. What do you have now? You have a valid high. So now what can you look for? You can look for short opportunities. Taps right back in, and boom, runs the low. Awesome. Sweet. So we have more structure. Like, look how simple this is if you just slow down. The market doesn't move that fast. Just slow down. Sometimes I think we get too caught up in being like, oh my gosh, I need to catch this trade. I need to catch this one millisecond trade inside right here. I need to catch it. It's like, no, you don't. Just wait till the macro starts moving, which can be your 12-minute or your 1 minute, depending on which time frame that you actually enter on. And then once that presents the setup, prevents what you're looking for, then you can drop down to a lower time frame to A, either refine, or B, trail and manage your trade, right? So just be patient and don't rush into every single trade that you see. Why? Because you need to understand narrative. That's where a lot of people are failing. I see it over and over and over and over and over. People are like, oh, Pac, why did this valid high not hold, or whatever, XYZ, why did that one not hold? Well, it's because XYZ didn't happen. But you haven't done enough narrative studying. You haven't done enough back testing. You haven't done enough of price discovery and everything like that, to where you genuinely just are trying to make this 100% mechanical. And I'm just going to tell you right now, if it was able to be 100% mechanical 100% of the time, there'd be less people that fail. Yes, you might make the argument that people, their emotions get the best of them, which is true. But if things were 100% mechanical, people wouldn't be emotional. It's that simple. That simple. So, just need a valid low to occur, and then what are we going to do? We can take a valid high as a short. Why? Because we're inside of our zone. So we put in a valid low. If you don't see it, it's when we close right here. Right? We put in a valid high right there. Boom. Now, if it retraces back into that box, what can you do? You can look for shorts. Expect it to do what? Run the lows. Oh, there you go. Congrats. You made some more money. High there. Or low there. High there. So make sure that one didn't gap real quick. This is close of 71, 75, open. Nope, no gap. Okay, great. So that's our previous zone there. From here to there. Previous zone, previous swing. Remember, this zone is mitigated. This zone is mitigated. So when price starts moving up, which it totally could, why? Because we're at the 30% level, right? The unmitigated 30% of this zone over here that hadn't been tapped yet. So if price starts to decide to start moving up and it breaks structure, right? To confirm that you're going bullish, remember, all of this is going to get ran. Why? Because it's already mitigated. And you have a completely unmitigated zone up above. Completely unmitigated zone up above. So as price goes, again, we're still, expectation is continuation until when? Until we hit an area that we'd expect price to shift. Are we in an area where we'd expect price to shift? Yes, the answer is yes. Why? It's in an unmitigated zone, a completely unmitigated zone. So there's a valid low there. Let's see if you ever get a valid high. No, not yet. Nope. Still no valid high. So no valid high occurs. No valid high occurs and runs through the whole entire zone. So A, if I was short from the zone, I shouldn't be taking a single trade. If I was believing I was just short from the zone, there's no indication that we are now going to keep continuing. But there is an indication now that we will break. And we did. We broke right there. So now, what do we expect? We expect price to run higher, and we expect price to take out all of this liquidity in here. Why? Because it's non-structure. It's non-structure. So now we're looking for bullish trades. So what do we need to occur? We need a valid high to occur, then a valid low, and then we can take trades up to that liquidity point. So there's a valid high. So now we just need a valid low. Boom, there's a valid low. Now we can just take price right up to where we want it. Boom, and look at that tap. It made equals. Remember, if you watched video 9 where I said to take profit, I said most likely it's going to go here. Sometimes you can take it here. So now we have a new high here, right? There's one here, low there, there. So what does that make this? This makes this our new zone, right? So what would we expect? We'd expect if we put in a valid high, which we did, we just need a valid low, and then we can do what? We can take longs again once we get a valid low. So your valid low candle is here. So remember, in these scenarios, if it decides to validate this candle, because this is your valid low, this is not a trade that you want to take. Why? Because if you watch video 9, your RR doesn't start at a 1-to-1. Your RR doesn't start at a 1-to-1. Yes, I could be like, okay, well, Pac, I'll just go up here. Yes, sweet. It's in the middle of nowhere. Yeah, there's literally nothing here that's going to bounce off of. So, if that's the case, we want to find a better entry, something lower. Something lower. You either let this leave you and say, okay, I'll just wait for the next one, or you let it just start a range and then you just wait till the bottom of the range forms and then you're good to go. Hopefully that made sense. Anyways. See, there's your valid low. It runs the highs. So it does successfully do what it's supposed to. It wicks it and immediately tries to put in a valid high, which actually occurs right there on the close of that candle. So you'd expect price to go down, so you wouldn't even be looking for longs yet. Still no valid low. Still no valid low. Still no valid low. There's a valid low here. And is that a trade you can take? Yes, but again, does it fulfill the requirements of this being at least a 1-to-1 to start? Nope. So it's not something you're looking to take. You know it's in a range. How do we know it's in a range? Because A, this high failed to do its job, or this low failed to do its job of closing a new high. So we failed, so we're in a state of range. So would I long up here in the top of the range? Heck no. I would not long at the top of the range. That's just silly. That's asking to get wrecked. Asking to get wrecked. No closure, so there's no break here yet. There's no break here. Still no break. Okay, you get a break there. You get a break there. Let's look at our previous zone. Remember what we talked about. This has been a consistent theme. Completely unmitigated zone. It hadn't even touched 30%. It taps 50. So if we flip into a tap of an unmitigated zone like this, are we expecting this to be a fake flip or a real flip in structure? Well, the answer is fake. I'm going to tell you so many times, just go back and test it. This was going to be the case where fake flips occur. Just like this. So when I get that valid high or valid low to occur, this is where I would be longing the market. Why? Because of the zone. I believe zones over flips. Zones over flips. I just believe the flips are used to get there. You don't have to agree. You can disagree. That's fine. That's just what I believe. That's what my data says. We can see that price. Did it break it? Very close. Almost broke it. And there it is. It breaks. And now you're at the end of the day. Hey guys. Anyway, guys, I hope that helps. That is our market review from Wednesday, May 8th, 2024. See you on the next day.